This panel is titled, sorry, it is not titled this. It is titled Seed Investments and Analysis of the Risks and Opportunities of Investing in Africa's Agriculture Sector. And seed investments is a bit of a play on words. We are going to focus on early stage investments, but not exclusively on early stage investments. If you do want to move a little bit closer to the front, that'd be nice. But if you're comfortable in your seats, then please do stay in your seats. So today I am delighted to be joined by 4 panelists. We are sadly 3 down, but we have a wonderful conversation coming up. So first on my left is Wesley Davis, who is the head of strategic partnerships at Delphos. And he focuses on emerging markets finance, previously at HSBC and Renaissance Capital. And then in 2016, Wesley co-founded Alluvial Agriculture, which provides comprehensive support services to smallholder farmers. And I'll let you speak a little bit about that in just a moment. Further on to your right, we have Susan Payne, who is CEO of Holistic Agricultural Investments Group Limited. Susan has, previous to her current role, she has an extensive career in finance, previously at JP Morgan and Goldman Sachs. And she spent the last decade involved in developing food production and delivery systems in Southern Africa. And in 2016 as well, she co-founded Holistic Agricultural Investment Group, which she currently manages. And Susan will talk a little bit about this as well, but they buy, advise on, and also operate agriculture projects in Africa. So 2 people very much on the ground operating enterprises, as well as focusing on the investment side. Further along, we have Guy Kamguya, if I am pronouncing your surname correctly, who is a portfolio director focused on value creation at Zebu Investment Partners. Guy was previously at Philafrica Foods, Credit Suisse, and Dow Chemical, and his focus is integrating impact and ESG metrics and strategy into the commercial performance of Zebu's portfolio companies. And then finally, last but not least, we have Tarek El Sherbini, again, if I'm pronouncing your surname correctly, which I think I am, who heads up the agribusiness Southern and Eastern Mediterranean for the European Bank for Reconstruction and Development, the EBRD. Tarek has worked at the EBRD for 15 years, leading debt and equity financing and investments in the food and agribusiness sectors in North Africa, the East Mediterranean and Eastern Europe. And actually, he played a leading role in expanding EBRD's operations into Northern Africa. So brings a strong expertise in terms of how to drive capital into new markets for a DFI. And he also sits on the board of several companies, so brings the operational perspective as well. The format that we are thinking about is letting panelists introduce a little bit more about not themselves, but the role that they play within each of their organizations and how it relates to catalyzing investment for agriculture across Africa. And then we'll have questions from myself as the moderator, and then hopefully an opportunity for questions from all of you, or some of you, as the audience. Before I hand it over to the panelists, as I said, I will be moderating this panel. My name is Laura Amaya, and I am an associate partner with Dalberg Global Development Advisors based in London, but focusing extensively on agriculture and agriculture finance in Africa, but also in Latin America and South Asia. So without further ado, and just making sure that we do have time for a robust discussion, let's just go in order from Wesley to Tarek, and just maybe very briefly, in just a minute or so, give us a highlight of what you work on.
Sure, thanks very much, Laura. So I'm Senior Managing Director at Delphos International, which is a Washington, D.C. based financial advisory firm that specializes in raising financing from both development finance institutions and the private sector to support companies and projects in emerging markets. My career originally was in emerging markets investment banking, and then wanted to focus on more tangible development projects in emerging markets. And as a private investor, I co-founded and supported the development of alluvial agriculture, which was initially solely based in Nigeria, which developed what we call the community block farming model, which is essentially aggregating local farmers into collective that delivers minimum efficient scale to provide comprehensive services from mechanization, site-specific agronomist advice, as well as all the financing for the agricultural inputs, insurance, and then harvesting and market access. And that's been a very successful model. We received some very generous support from the MasterCard Foundation, which enables us to service 65,000 farmers this year. We expect 100,000 farmers next year. And the financial services community likes the fact that we're providing holistic services because that ensures a greater chance of success and repayment of the obligations. So that model is working quite successfully, and we'd like to roll it out more broadly in Africa.
Wonderful, thank you, Wesley.
Thank you.
And I think it's fascinating to hear that you, like Susan, are coming from both the sort of operational side, but also with an eye on the investment side and how to drive capital to what is perceived as a risky and generally challenging sector. Susan.
Can you hear me? Am I clear with this? My name's Susan Payne. I am the co-founder and CEO of a company called Holistic Agricultural Investments Group, also known as HAG. HAG is a venture capital firm that is based in Mauritius, and we buy and invest in and operate disused, dormant, disaffected sites, farm sites across southern Africa. Currently, we're holding a couple of sites that are both substantial. They tend to be between 3,000 and 7,000 acres, and we grow a variety of different crops on those farms. We tend to focus on green initiatives as much as we possibly can, and are going into plant protein, also the plant protein business as well. There are a whole series of different challenges that we'll go into shortly, but I've done this now for 10 years plus at the coalface when we have to operate and deal on a day-to-day basis with the obstacles that one faces in many of the African countries. And there are some good lessons to be learned ahead and how some of the larger government and other agencies can assist people like myself and others, many others, on the ground to execute their roles.
Thank you, Susan. And I think you'll complement that perspective in an interesting way because of your role in value creation.
Exactly. So my name is Guy Kamgia. I'm Portfolio Director at Zebu Investment Partners. In my role, I'm focused on value creation. Basically, in a nutshell, I'm trying to improve EBITDA in our portfolio company, but also implement ESG activities in all our portfolio companies. Zebu is a private equity fund investing across the food value chain on the continent.
Thank you. And Tarek, you're probably the other end of the spectrum from where we started, from the EBRD end. I know you do invest in smaller SME size, probably more the medium side of them, but would love to hear what your specific role entails and how it relates to the topic of the panel.
Thanks, Laura. So I am responsible for the food and agribusiness sector, investments and financing in the food and agribusiness sector in the southern and eastern Mediterranean. So the part we have in Africa is the northern part of Africa for now. And we focus on investing and financing companies through both debt and equity in the food value chain across the food-related sectors. We do, as an institution, about every year 10 billion euros of financing and investment across all business sectors, including about 800 million euros in the food and agribusiness sector specifically. In the SME sector, across different industries, we provide about 1.5 billion euros every year of debt and equity financing, in addition to advisory services and other methods of support. And we provide that through several channels in the countries where we operate, and this includes direct financing to SMEs, credit lines to local commercial banks that should be on-lent to SMEs, as well as risk-sharing facilities with commercial banks. So in total, we reach about 300,000 SMEs every year through our financing channels and also through our advisory services across the 40 countries where we operate. Again, North Africa is only part of Africa, and the rest is in Central and Eastern Europe and Central Asia.
Thank you, Tarek, and I'll come back to that in terms of the overlap between food and ag and SMEs and how that plays out. But perhaps just to get us started with one of the big questions that we discussed in preparation for the panel, Susan, as you said, focusing on, or maybe starting with what are the risks and what are the challenges. that make it so difficult, either as a perception or as a reality, to get capital into the agriculture sector across Africa, really. And I guess from your perspective, what investors and other players can do to help ease this challenge? More indexing on the challenge, and we'll get to the second part of the question in a little bit.
I would put challenges into two camps. One of them, the first camp is challenges that you can, challenges that can't be changed easily, challenges that are quite intransigent and very difficult to change, and challenges in the second category that are far easier to change. So before I give you this list, please sit still, because by the end of this I will come forward with the opportunities, because there are several challenges. The challenges that are just generic to Africa are that the average age of a farmer is 60 years old. The flight of the youth is into megacities that are establishing every year. In fact, there's supposed to be 12 megacities in Africa by 2025, according to Standard Chartered. There is quite poor infrastructure still. There is quite poor technology in many areas still. There is quite a lot of red tape. Power outages are not a surprise, which is also quite difficult to deal with when you are running large agricultural practices, or even smaller agricultural practices for that matter. So you've got a sort of a litany of issues, and that is aside from climate change, which is a very real issue that we notice year by year on the ground. The two rocket boosters that are going to actually transform Africa, that are challenges nonetheless, are funding and operational expertise. So those two are critical in agriculture, and as someone who operates on the ground day to day, they're both vital, but they're both big challenges, because funding is lacking generally in Africa, and operational expertise, when you can find a group that can operate effectively, then I would stay with that group. A good operator on the ground. Agriculture is all about outcome, and a good agricultural operator is very important. So those two marry together, and when you can conjoin them, they can boost investment returns dramatically. In terms of, and I'll finish this off now, but in terms of funding, there are challenges in funding. The challenges in funding are that banks on the ground tend to dislike lending to agriculture. They take collateral that is far too excessive. They are very slow in execution, and frankly, they're even slow in transacting day to day. Number two, governments. Governments do not form partnerships very effectively. They don't have many advisors to advise them on what is happening on the ground and what is necessary on the ground, like establishing economic zones in certain regions that would be very helpful. And thirdly, the DFIs on the whole they are not as focused as they might be on SMEs. And SMEs are the engine to growth in any economy. They're the growth to this economy in the UK. 99% of business here is SMEs. Their growth in the Chinese economy, where 98% is SME based. Africa has a massive SME business that is utterly ignored, largely ignored. In fact, in South Africa, just as a statistic that is alarming, 15% of businesses in Africa that are SMEs have, 15% have funding. 15% of SMEs in South Africa have funding. The rest have no funding. And that is in South Africa. So South Africa actually is generally quite advanced. And when you see that in South Africa, you realize that there is very little funding to SMEs generally across the continent. So those are the three areas that I think are the three components: government, DFIs, and elsewhere. We need to focus on how we can get these groups to work together and provide adequate funding to SMEs.
Yes, I agree, Susan. Thank you. And it's interesting that you mentioned sort of two levels of challenges, one that is more macro, structural, and then another one that is linked to investment. Even that, I'd say, has three layers, like the broader ecosystem. You talk about governments and capital flows, et cetera. There's something about the market and the sector level, so the capability, the skill building, et cetera. And then there's something at the company level, which is how do you actually raise capital? How do you actually work with investors or banks or others to get the capital you need? And I wonder if this is, Tarek, from the EBRD's perspective, a way in which you think about how to tackle challenges. When you talked a little bit about the work that you do in food and agriculture and with SMEs, in particular with SMEs, you talked about the 1.5 billion euros that you deployed go to either investment and risk sharing or you said other support, which might be grants, some kind of technical assistance, potentially even some market shaping work. Could you talk a little bit about the challenges you see from the perspective of a European finance institution and how that plays out perhaps in relation to some of the challenges that Susan elaborated on?
Absolutely, thanks, Laura. I fully agree with Susan. I mean, both the operational expertise and funding are key issues. Any investor, including development banks or other multilateral institutions, they look at the SMEs and other companies to invest in. They seem like other investors. Everyone wants to invest in a good business. They want to get their money back and they want to get a good return. And it's always the challenge of SMEs how to reach that stage, how to be appealing when already we're starting from ground zero. The way we and other development banks try to help at the early stages is through providing advisory expertise before the companies sometimes are ready for a big funding. So trying to bring in experts and consultants covered by grants to a large extent, and to help provide this operational expertise that Susan was mentioning to help companies reach that stage when they're appealing and attractive both for DFI financing and also for private sources of financing. There is something that governments have been trying to do in many countries as well to help SMEs, which is to provide subsidized funding, subsidized loans with cheaper interest rates than market levels. And I've seen this in many countries, and it's been effective and helpful to SMEs in those countries to have sort of cheaper funding available. And also there are elements of grant financing that also development banks sometimes mingle with financing to reduce the overall cost of the financing and to reduce also the principal amount that companies need to repay. So all of that tries to provide and tries to try to tackle the funding issue for SMEs, but of course it's not sufficient. There is much more that needs to be done, both on the local level and on the international development level.
Yes, I agree, and that's actually a great segue to the next question that we had. You talked about, there's advisory and TA via grants to companies to help professionalize or improve operations or even improve a business model. There's concessional debt, and presumably that can be either direct or intermediated. And then there's what I understood to be sort of blending, bringing that into other capital pools with different layers of investors. That's one way to start mitigating some of the challenges that emerge. I wonder, Guy, from your perspective, working directly with investee companies, what has played out in terms of how you work to either mitigate some of the risks or address some of the challenges in your role in value creation services?
Yes, thank you, Lala. So typically we try to do this in 3 ways, and really start with the due diligence process. The first step, we try to really have a thorough commercial due diligence. Mm-hmm. And when we say commercial, basically what we try to do is develop hypotheses that need to be proven true for us to invest in the business. We have commercial, like I mentioned, we have financial. We really look into the audit of the company, the financial statements, to understand the gaps where we can improve. More importantly, also, we have technical. To Susan's point, we need operational expertise on the continent. So let's say, for example, you have a mango processing business you're trying to invest in. We need to bring a mango technical expert on the ground to assess the machinery, the equipment, Six Sigma, and all of that for us to really identify what can we do to improve that. So once we get all of that due diligence reports, now, as a value creation team, we try to develop a value creation plan in partnership with the sponsor of the company. And real value creation is basic as how can we improve revenue, how can we optimize costs, and personally, me, I tend to focus a lot on free cash flow generation. Really trying to make the portfolio companies focus on cash generation. How much cash you have in your bank, because without cash, you're dead. Thirdly, what we try to do, we also have a technical assistance facility from TechnoServe. Okay. So they also help us on various value creation initiatives.
That's super interesting, and you're talking about already partnering with the likes of TechnoServe. You talked about engaging advisory services firms to provide that technical assistance. Wesley, from your perspective, both as an investor but also with Alluvial and providing services directly to smallholders, how have you tried to address some of those challenges or tried to mitigate some of the risks?
I think it's interesting both what Guy and Susan said, and I'd amplify that outcomes are what is important. How do you ensure those successful outcomes? You have to be in control as many of the factors of delivery as possible. Mm-hmm. You really can't outsource things. You have to control all the critical operational elements of success, and to do that in a holistic or comprehensive way. If you're relying on somebody else for one critical part of your value chain, you're often going to find yourself disappointed or let down, or it's going to cause delays that cause negative impacts on your profitability. So you really have to be as vertically integrated as you possibly can and control as many of the factors of delivery as possible. Otherwise, you're going to have operational challenges that are going to seriously damage your profitability.
So vertical integration is interesting because there's a level to which you lose focus and sort of dilute the expertise, to Susan's point, of having that ability to operate a company effectively. How have you dealt with that in both of your hats?
So I guess at this stage, for example, for Alluvial, we just focused on complete comprehensive services to smallholder farmers. But now we're looking to vertically integrate upwards into storage and logistics in a more comprehensive way. We've relied on other parties to do that, but still, that to my mind is the next opportunity for us, and I don't think that is as operationally challenging as primary cultivation. Primary cultivation is very challenging to get right. Mm-hmm. So if we can do that right and control the output from that primary cultivation, then I think it's easier to move up the value chain into storage and logistics. Interestingly, processing is something that's probably, certainly in West Africa, is slightly over-invested in that there's been a lot of programs to invest in, for example, rice milling. Up until about 2 years ago, I don't think there was a rice mill in Nigeria that operated at more than 30% capacity. It was easy to invest in and cut the ribbon ceremony for a brand new rice mill, but where's the feedstock going to come from? Mm-hmm. Somebody's got to grow it, somebody's got to deliver it to the rice mill. So there again, that's about controlling the operational elements. You can't just come in at one point in the value chain and expect to be successful. You have to control the entire chain, or at least as much of the chain as possible, to ensure successful delivery.
That's a very interesting perspective, and I guess I could be on either side of the fence. When we think about, I do want to save a little bit of time for questions from the audience. So I guess I'd just like to talk a little bit about opportunities for investing in food and ag, and hear from the four of you. But starting with Susan, because I think you probably have a response.
But I love that, because controlling the supply chain is vital. Because it creates jobs. I mean, why export these jobs to other countries when Africa's crying out for job creation? It is so critical, and it's really an important component, I think, of this whole process. But anyway, this is
No, that's exactly where I was going. I was curious to hear where you, for example, draw the line with Hague on what level of control of the value chain you
as
seek
much
to have.
As we are funded to do. Okay. That's the answer. If you have funding, there's no farmer, there's no commercial farmer, there's no business person in this room that wouldn't say, I want to control the entire process from the turf to the table if I possibly can. And I want to create jobs and control it so long as I can, because the uplift is in the processing. I mean, let's face it, life at the front line, producing food is really tough.
Yeah.
I mean grassroots. I mean, who said this? Somebody, like, it is the toughest job is the farmer's job, and yet he gets the least. And then the processing is the uplift. I mean, at least you try and capture the entire chain if you can. And then you can create basically an ecosystem yourself where you can have processing on your farm site, which is what we're doing. And you can grow your bananas, process your bananas, package your bananas, and then ship them off in your trucks. That's what we do.
Yeah.
And that's what we like, because you can control the process and nobody can actually in any way get in your way to stop that.
So from Zebu and EBRD's perspective, very different ticket sizes and different sort of target investees. How do you see this question of
vertical integration?
Yeah.
No, I totally agree with Wesley and Susan. So a perfect example, one of my portfolio companies is a pig farm in Cameroon. So we used to produce pig, for pork meat consumption in Cameroon. But eventually, we used to sell B2B, so directly to wholesalers. But we saw that they were getting more leverage and trying to squeeze our margins. So we had to move downstream to process the meat and now open also our own retail outlets so that we can sell directly to the consumer. But to your point also, we had to implement a commercial maize farm for the feed, for the pigs. So we had to be almost vertically integrated across the whole chain to really be a success story.
And
So,
was that via the same investee, or was it multiple companies?
the same company.
Okay.
Yeah, same company.
Yeah. What's your view?
I mean, I fully agree with the points. It makes a lot of sense to have a full coherent value chain within the same market rather than having a crop produced in a country and then it's sent off to another continent to be processed and packaged and then sold back again to the same market. We try to support that through directly through value chain programs, value chain competitiveness programs, where we can provide financing as well as technical assistance to companies, SME suppliers, to a large processor in certain country. So we try to support that value chain perspective. We also invest and finance directly companies along the value chain when it makes sense. So just to make sure that this value chain remains in the country and benefits both the labor and also the economy overall in the specific country.
So that's fascinating. You don't do it just via a single investee company, but building up the entire value chain in country. Could be via one company or could be via several companies. Is that correct?
Yeah, absolutely.
Okay, that's very interesting. I mean, if we think about like one of the biggest success stories of agriculture in Africa, the Kenya Tea Development Authority, that is vertical integration at its best. But presumably it could be done via building up the entire value chain, even if it isn't in the same, under the same umbrella.
But one point I'd like to add, Laura,
Yeah.
DFIs or financial investors, they need to have material to work with, so that there has to be the businesses, the companies, the business people wanting to do the business and the right stage. And then the providers of capital, they just provide the capital to give this extra push. And in the case of DFIs, provide also advisory in addition to the capital, but they cannot create DFIs or financial investors or private equity companies. They cannot create and run businesses. They need to have the materials there, and then they can try to give the push when needed.
Yeah. Yeah, and I think, Susan, coming back to one of the points you made early on, that's where the challenge of how do you get businesses to not just start up, but actually grow to the level where they can get significant investment is probably a critical point.
Yeah.
I just very quickly wonder if there are other opportunities that you see. Vertical integration is one, building up like a pipeline of investable companies is probably another one. Any others that you would highlight in terms of how to address what is perceived as a challenge of investing in agriculture across Africa? And then we'll turn it to questions from the audience.
Well, I mean, the opportunities for, I guess, is it solutions or opportunities? The solutions are better technology, better infrastructure, better partnerships between government and others. Leadership, actually, people that have vision, that are thought leaders, that are prepared to go the extra 20 miles to get things done. So the solutions are many. The actual opportunities are generational. I mean, we're all sitting in this conference because we think Africa is a very hot continent, and there is indeed a business revolution going on that's not just lip service. So the question really is, when do we see this permeate the continent? Because right now you've got hotspots where you're seeing some really big success stories, and then there is flatlining elsewhere. And I've spent 30 years in emerging markets. I've seen how this plays out. What happens is that 1 year Bulgaria is at 6 cents, and then 2 years later is at 65 cents. And 1 year Peru is trading at 6 cents, and then 5 years later is trading at 90. So it's a J curve that accelerates dramatically when it sparks with political certainty, when there starts to be a series of orthodox policies adopted, when things start to all align, then, and Zambia is going to be a good example for us all to watch now with this new government of HH after Lungo has finally left, and to see what happens and to see what kind of ignition that we see in Zambia. And already there is this whole new view of Zambians internally getting very excited about their country. So the opportunities are across the board, and the issue is really what support that there is to reach those opportunities everywhere, not just singularly for funds that get allocations from DFIs, but for everybody, not just smallholders, because smallholders make up 80% of all farmland in Africa, 2 hectares at a block. Smallholders meaning 2 hectares when I refer to this, according to McKinsey. Compare that to 6% in Brazil. 80% of farmland is held by smallholders in Africa. In Brazil, it's 6%. Okay, I mean, it is so, Africa is so individualistic and so unusual still that, and it needs a whole lot of thought leadership to get to the next level. And so yes, many opportunities, but it frankly needs big support from banks, governments, and DFIs to get there.
I like it, opportunities and commitment. We do have a mic, which is great. We have about 5 minutes left, so probably can take a couple of questions. Maybe we'll take 1 or 2 if there are, and if not, I'm sure we can keep talking. Any challenges from the audience? Different perspectives? Yes, please, go ahead.
Okay, well, you're squeezing us for a challenge. But, my experience, and I've worked a lot with smallholder groups, and I was having the conversation with somebody earlier today, is smallholders can be very unreliable. And, you know, we've spoken about, you know, better technology, better systems to make them more reliable. So obviously, you know, that's important, but that comes in time. So what you tend to find is the companies who can afford a smallholder and outgrow base happen to be very big, and they can afford to take the hit if the smallholders don't plant, if they sell it to somebody else. So by nature, people who use large quantities of smallholders are already big companies. And to actually squeeze in an SME, which I happen to be, into that, and then demand the use of smallholders is a bit of, I don't want to use the American term oxymoron, but it's sometimes it's difficult to fit, because, I mean, if I'm spending my money and going in to produce in Africa, it'll be under my control. Once I've got my own production sorted out, then I might risk 1 or 2 smallholders, see how we get it on, then it grows. So, you know, funds, which is exactly where I am at the moment, trying to find funds, and everybody wants a smallholder part of that. It is difficult. There we go, that's my challenge.
No, it's a great one. Any responses, thoughts on that?
I would say I think they're a hybrid model of having, you know, nucleus farms that gives you sufficient scale that then has that smallholder outreach is probably the evolution of the model, because, you know, smallholder farmers, as Susan says, I think, you know, it's the average farm size in Africa is, I think, 1.6 hectares. In Malawi, Nigeria is probably 0.4 hectares. So you can't ignore them, but how you can leverage them, and what we do, because MasterCard Foundation's criteria was 75% had to be youth or women. And so we find that the reliability of youth and women tends to be greater. So we've had, I think, a bit greater success in smallholder outreach on that basis. But I think a nucleus farm with smallholder outreach and maybe SMEs that are part of the value chain as well is something that can be incorporated in, particularly with logistics is where we see us utilizing SMEs, you know, guys that are operating trucks and getting crops and getting our tractors to where they need to be, that sort of thing. And other equipment leasing entities that are effectively SMEs.
Yeah, and you talk about the MasterCard Foundation. There's probably a level of concessionality or grant element required to be able to go deeper into smallholders or women farmers. Absolutely. Or like atypical segments, as it were. Kia, I thought you were going to come in with something.
Yes, so I do agree that we need to move from the whole smallholder to more commercial farm, large scale. That's going to take time. Maybe in the meantime, what we can do, and I think the DFI can play a better role in organizing the smallholder supply side of the agri chain, because the risk appetite is different, right? They can quote unquote lose money but have a great social impact. If they can get involved early on and really try to organize the smallholders, just organizing them in groups, for example, to have a more better consistent quality produce, while investors like us or operators like Suzanne can focus on commercial large scale production, that could be a potential solution.
But you know what happens? I mean, and the reality, and that's a really good point. The reality is that when our farms are properly funded and we're running good farms, then we are the market. We meaning SME farms, farms that are valued at, say, $4 to $12 million. Those farms are the whale projects that actually are the central area market, if you will, for the smallholders in the region. So our farm in Zambia will buy nuts off the smallholders that are in the region, and then we will ship those nuts together with our peanuts down to South Africa. So by funding SMEs effectively, and you can see where I'm coming with this, by funding SMEs effectively, they can uplift smallholders alongside them. And that is the most direct way of doing that. I think it is the easiest way of doing that as well, because they have a very strong incentive to take advantage of the better pricing that we get for our nuts. We get good pricing for our nuts. We can pass that good pricing on to the smallholders if they can provide us with those nuts. We aren't going to take all of the risks that they have, and they aren't going to take any of the risks that we've got. But if they can produce nuts, and that means they've got to be willing and able to produce nuts and supported to do that, then we will take those nuts. And we will also support them as best we can with any kind of seeds, fertilizers, knowledge base, mentoring. We will do that as well. But that comes back to the basic premise that we have to focus on SMEs and supporting them because they permeate every component of the farming landscape.
Thank you, Susan. I see we are out of time. Thank you very much for your challenge. I think it's a really, really important one. How do you drive sort of investment into agriculture and still have an impact in smallholders or other segments that are harder to reach for a number of reasons? I think just some takeaways. SMEs are probably the motor of growth of agriculture across Africa. I think there's an important role to play for value creation and working with different tools, be them financial or non-financial, to strengthen entire value chains. And Wesley, your point on vertical integration and thinking about how much control you can have with the view of essentially improving livelihoods across the continent. Mm-hmm. Thank you all very much. Thank you to the audience, and thank you to the challenger of our panel. Really appreciate. And I think we now move on to a couple of speakers in the afternoon.